What's going on, everybody? Welcome to Money Talks with the Black Sky Group. With your host, Latrice, the Forex Queen, Will, the Stock Market Bully, and me, Anthony, the Godfather Norwood, here to discuss all things finance when it comes to building wealth and residual income. This week's show is sponsored by Proprietorship Solutions. Services include credit counseling and debt settlement. For more information, go to their website, www.proprietorshipsolutions.com. That is www.proprietorshipsolutions.com. Hey, spelling bee champ, go ahead and spell it for them.
That's PERSONMEANT solutions.com.
All right. So let's jump right into this, man. So last week, we discussed, I'm going to give a quick recap. Last week, we discussed the typical week of a Forex trader. We talked about pattern day trading. Now we had tax expert Mr. Jeffrey Blackwell on the show, who dropped some jewels when it comes to having knowledge when dealing with taxes and trading and in the business world, which I'm going to tell you, man, I learned a whole lot from him last week.
Absolutely.
And also went back and talked to my CPA, like, hey, look, man, I heard this. He's like,
did you know this?
Yeah, like, did you know? He's like, hey, man, leave me alone. I got this. You hired me for a reason. I said, all right, you're right. So, all right. So then we also talked about branding for the entrepreneurs, right? And then we talked about the Fibonacci sequence. So, Latrice, on a recap of a typical week of a trader, go ahead and tell the people what we talked about last week.
Okay, so last week we just talked about how do you set up your trades on Sundays, monitor those. You're entering your trades on Monday, monitoring them during the week, getting out of the trade by Friday, reevaluate, and just seeing your gains and your losses.
Right.
And, setting your plans for the next week.
Cool. And Will, when we talked about pattern day trading, give us a quick recap of what we talked about last week.
Recap on pattern day trading. So we talked about a couple things. Last week we talked about the normal trading day, same thing, about the timelines of when the market goes up. Everybody goes to lunch, so we see less volume during lunchtime. We also talked about pattern day trading and a couple ways to get around it. First and foremost is to have multiple platforms. Still need a little bit more capital.
Right.
But if you don't have $25K, but you have a little bit less and you can invest in multiple platforms, you can get that 3 pattern day trades across multiple across
the
different
workaround.
ways. Yeah, it's a little bit of a workaround, but it's worth it, guys.
Cool. And then we talked about branding from the entrepreneur's perspective, man. What I discussed talking, say, hey, how do you brand? What is branding? And the importance of creating a brand for your company and getting that brand out there so you're recognizable, and also remember that your brand is your reputation. All right. Oh, then for my advanced people, we talked about the Fibonacci sequence. Ooh. Oh, look at Latrice over there smiling. Go ahead and give us a recap there. Talk about what we talked about with the fibs.
Yes. So we talked about how fibs don't lie, how they're used in the foreign exchange. How they're used in the Fibonacci, how we use the Fibonacci retracement numbers in the Forex market to establish our support and resistance so that we can get those sniper entries and get into the market more effectively and, be more efficient as far as our trading.
Nice. And that's from the Forex side. Will, you got anything to add to that for the recap?
No, actually, Latrice is spot on because if you learn how to use those Fibonacci retracements, you have built-in support and resistance lines. So as it goes through a Fibonacci, that's probably a good time to go ahead and start buying. As it's dropping through them, that's a good time to start selling or putting those or go short on those on those options. So that's something to definitely use as your first tool as an indicator.
Put in shorts, yes. All right, so on this week's show, we will discuss creating a trading plan, discipline in the market, which is really key, guys. That is really key. So we had a guy in the BSG group mention something about, I wish I would have stayed in the position because I saw it keep going up. Well, discipline in the market, in which we're going to discuss later, teaches you that, hey, that ain't always the right answer. All right, then we'll talk dollar cost of averages versus speculation. Then for the entrepreneurs, man, we're going to discuss business structure. Like the previous episode, I talked about organizational structure. This time we're going to talk about business structure. For my advanced audience, we will discuss top-down analysis, i.e. analyzing the market from high to low. Then we'll finish up with macro versus micro indicators. All right, for all our listeners, man, hey, I encourage you guys to come join the BSG Facebook page. Search BSG Capital Growth on Facebook. I'm telling you, man, we drop gems in there. There's all types of great dialogue going on in this group for trading, entrepreneurship, even real estate, man. So, hey, Tell your people, tell your friends, tell everybody. Search BSG Capital Group on Facebook and come join the group. So let's get right to it. As a matter of finance, Latrice, talk to us about creating a training plan.
Yes, so we give you guys a lot of information as far as how to get in the market, how to get started, and all these things. So it doesn't mean anything if you don't have a plan.
Yes.
So you want to make sure that you plan. So your plan, these are your rules. These are your rules that you're going to abide by when you're in the market. And you have to stick to it. So it includes your daily, weekly, monthly, whatever your goals are, whether if it's your PIP goal, whatever your financial goal, whatever your obligations are. So say I want to make enough money to pay off a bill.
Right.
So you have to have something that you're working towards. So it helps you to stay on track. It helps you, just like you said, the guy who said, I saw the market continue, I should have held my position. Well, you secured your profit.
Right.
Because you met your goal for the day. So it takes a lot of discipline to be able to say, okay, I reached my goal for the day. Now I'm going to get out of the market and go on and do something else, because you don't want to treat trading like a job.
Yeah, you make that much money. Go.
Yeah, so when you're in that market and you made your goal, a lot of times I see traders, they'll get in the market, they reach their goal, and they get greedy.
Yeah.
Oh man, this thing's still moving, it's still going up. Then you start chasing the market, and what happens? You give the market back the money that you just made.
Yeah.
So then it's a cycle, because then you're going to revenge trade. Oh my gosh, I got to get this money back. I just made this money. Then what happens? You continue to lose more money. So not only did you give the money back that you made, you gave interest back to the market. So you have to make sure you have a plan, you stick to the plan, and you discipline enough to do just that.
So when we talk about discipline in the market, right? Mm-hmm. And you make a really, really valid point when you was talking about, like I brought it up earlier, the guy said, hey, I should have stayed in. Let me tell you what happened to me one time. And this is when we were in Afghanistan when this happened. I had put a call option on Apple one day. Mm-hmm. And Apple was trading around 220 at the time.
Yeah.
Yeah, this is about 9 months ago.
Mm-hmm.
And so, for real, I had made over 200% on this, and it kept rising. Yep. I said, you know what? I was like, you know what? I'm gonna let it go. I'm gonna make all this money. I said, you know what? I'm gonna go do something. I'm gonna come back, and I'm gonna sell it. Bruh, I came back about 20 minutes later, all profits gone. All my profits had diminished. You know what I'm saying?
We don't have enough money to move the market. So get out, because what happens is you're like, oh my, it's still going. You get that FOMO kicks in.
Yeah.
Fear of missing out. It's going. You get it. And then you put another position in and you get caught in the pullback.
Yeah.
And then he's like,
that's what happened.
That's what happens.
Called exititis.
Look,
Cameraman talks about that.
Secure the bag.
Secure the bag. Yeah, man, that's crazy. So discipline in the market is huge, man. Like for me, I know that if I put in a position, I have a set number, percentage-wise, that I know if I get to this, once I reach this number, I'm out. I don't care what the market is doing. If I get to the point where I made that profit, let's just say, I'm not gonna tell you what my number is, but let's just say it's 25%. Right? Once I reach 25% on that, I'm going. Now, if the market continues to move in the direction that I'm saying it's moving, I do options, I'll jump back in a position. But I take my profits. I sell, get my profits, and then if I have to, I will jump back in to continue to ride the wave. You know what I'm saying?
I think one of the ways I do it, I'm gonna tell you all my percentages because it works for me. I use the threes. I go 3, 13, 33, and then at that point I'm running. The reason you do that is that way you have break points. So if it's at if it's at 13%, it rises to 17. If it drops back to 13, I know it's time to sell. I was still okay with that number. Same thing if it's up 50%. Now at that point I started looking a little bit different, and those are huge jumps, guys, because most of the time your position is gonna rise slowly. And like Latrice was saying, get out. If you're going to redo that position, what you want to do is if you started that position and you wanted to make 20%, if you're going to reset, make sure you're not risking all of your capital that you won. You know, take a little bit and go a little bit further up or down, but don't lose all that capital. That is the money that you made. You want to keep something from those trades because it hurts worse.
It does.
I know.
What you don't want to do is chase the market.
Oh, no.
You don't want to chase the market because what happens is you'll lose all that capital and you'll essentially lose your account.
I talked to you all about how to trade those big moves after it happened. Episode 1, 2, 3, 4, 5, 6, 7. Go back and listen to it.
All right. So anyway, you out of control. So Will, dollar cost of averages versus speculation.
Okay.
Let's talk about that.
Let's talk about it. So the first thing I want to do is I want to hit you all with the quote of the week, guys, because I want to give a little bit of knowledge outside of just stocks. So the quote of the week this week is, that which we persist in doing becomes easier. Not that the task itself becomes easier, but that our ability to perform it has improved. That's from Ralph Waldo Emerson. The reason that matters is dollar cost averaging is about continuously putting money into the market. Now, it is completely different from what we're talking about when we talk about options trading. Dollar cost averaging is a simple technique that entails investing in a fixed amount of money in the same fund or stock at regular intervals over a long period of time. If you have a mutual fund, TSP, 401k, or any product like these, you're already using dollar cost averaging. You're already doing what I'm telling you. It is one of the easiest and most efficient ways to accumulate retirement income.
Right.
The just for dollar cost averaging is you buy shares every month at a designated period. So usually do monthly, maybe bi-monthly at an outlined price. When the shares are cheaper during a down market, you accumulate more of those shares for cheaper. Then during an economic expansion, bull market, you are paying a premium, but you're looking at it to say that the stock is going up. The reason that matters is everybody can participate in the market. Right. You don't have to do options trading. You don't even have to do Forex, but you need to benefit off of growth. So if the market is going, if you don't have that 401k, if you don't have a mutual fund, a Vanguard fund, guys, you're doing yourself a disservice. There's money to be made right now. Next, we'll talk about speculation. That's the fun. Speculation is what's happening in certain segments of the market today. So speculation is, to give it a simple, speculation is what we see in the market today with some companies. Most professionals vilify speculators, but there's a reason to do it. Higher returns. If you take chances on companies that aren't doing so well, even if they do marginally better, you'll make money. Let's talk about the speculation company of the month. Hertz. Hertz is bankrupt right now, but people are buying shares of Hertz. As a matter of fact, Hertz just told the U.S. and anybody who's buying Hertz shares, I do not discourage anybody from using their own trading knowledge, but Hertz just told us that they're going to issue $500 million in worthless shares. $500 million of shares that will be worth nothing after bankruptcy. And do you know what the SEC told them when they said, "Can we do this?" They said, "Sure. If somebody's gonna buy it, you let them. You can have it."
And people buying it.
People are buying it right now.
Because not to cut you off here, but here's why. You get those new traders.
Yep.
They're new, and the only thing they know is, it's low. It's got to come back up.
So they buying low.
They buy. Their only mentality is just to buy low because it's low.
Not looking at. Wow.
No. I mean, this is a phenomenon that we're seeing. Like we advocate for Robinhood and Webull and these smaller trading platforms, but there is a cost. So somebody who looks at the balance sheet of companies and says, "Hey, this company should be doing well. They have a good debt to income ratio." That's not what's driving it right now. It's pure speculation. And guess what? Retail investors, for one of the few times in history, are beating institutional investors. The average guy is getting better returns than most hedge funds today.
Wow.
Think about that. And they're not analyzing the stocks.
Nope.
They just buy them.
They just buy. It's cost $2.20 today.
I like it.
Yeah, buy it. So one of the biggest industries right now that's on the speculation side is the airlines market.
Absolutely.
Yeah, go ahead and lay that down, because I know you and I had a conversation about that earlier.
So we were talking about this right before we started recording. So I'll tell everybody, I don't mind talking about my trading wins and losses. And right now, I looked at the balance sheet. I looked across the spectrum of the different American companies that potentially go bankrupt. And the one that had the best balance sheet and looked to be that it would have the best recovery, even if things went bad, was going to be Delta Airlines. So I said, Delta should have the best glide path forward. Well, guess who's having the best time right now? Spirit Airlines, ticker symbol SAVE, is crushing it right now because people are seeing that it's cheaper. So rather than buy a $30-something position for Delta, you can go and get that $8 or $9 position, maybe $12 for Spirit Airlines. And Spirit, if it runs up to $20 in a quicker period of time, they had a better return on investment. It just is what it is.
So here's a question I have, and even one of y'all can answer this question because I really don't know. What happens when the institutional traders get back on top? Now, does the do we go back to a correction, or are they going to skim off the top, or are we going to see another bull run? What are we looking at if that happens?
All right, listeners in BSG, this is one of my favorite things. I like to rant against the Fed, so it's about to happen. In 3, 2, now.
Let's get it.
So the Fed right now, what we're seeing is the Fed is said on Monday they're going to start buying corporate bonds. My individual perspective is what the Fed is going to do is they're going to hold the credit markets and they're going to hold the markets up long enough for the institutional investors to say, hey, I'm missing out. I want to get back in. And we can see all-time highs again. Now, the institutional investors can say, hey, this is a bad idea. Coronavirus is still going. There's still, businesses that aren't opening. Fayetteville today, Morgan's Chop House decided they're not going to open their doors anymore. That's one of the industries. One of the industries that are being hit. Companies that serve middle income personnel are having a harder time because they have a higher end clientele. They say they're seeing them lose faster because people with money. This is just a dime that I got off NPR today, guys. You can do your research. Affluent individuals are actually spending less money out of the recession, whereas lower income people are back spending at a higher rate. Wow. Well, there's not a lot of people that don't make a lot of money that's going to Morgan's Chop House. So once that happened, they just ran out of business. So that's some consolidation we can see. And if we start to see those type of weaknesses and we don't find a way to incentivize those middle income earners to go out and spend more, we could see a technical correction off. There's just not enough money in the market to go.
That's real interesting. So, Latrice, here's my question from the Forex market, though. How does all of this affect the dollar?
Well, it just depends. It depends on if that happens and the Feds push this money into the market, then yes, it's going to cause even more of a bull market. Right now, the market is pulling back, but it's just a pullback. Yeah. Overall, if I look at the higher time frames, the daily, the monthly, I see a bullish trend. Mm-hmm. So that's telling me that no matter, this is what I'm saying, when you're looking at news is going to push the market in the direction it was already intended to go. Right now, the dollar is bullish. Mm-hmm. It's going to take something major to happen, and it will break the trend and cause it to go back to a bearish run. But I see the dollar bullish right now overall.
Wow. That's crazy. Okay. All right. So now let's talk to the entrepreneurial side of the house. We've been talking about getting your trading plan going, disciplined trading, and all that good stuff. Let's talk to some of my business owners out there who are aspiring to be. All right. Let's talk business structure. Okay? All right. The business structure that you choose, and I want you guys to listen to me carefully during this segment, man, because a lot of times we choose the wrong ones, and we end up in a bad place for it. So that's why this is not a laughing matter. This is a serious segment, all right? The business structure that you choose, man, will influence everything from day-to-day operations, taxes, and your personal assets could be at risk, all right? Meaning, if your business is sued, goes bankruptcy, or anything like that, all right, your personal assets could be wrapped up into that, and they can take that too. Like your personal checking or savings account, your house, your vehicles, anything of worth could be at risk, all right? So keep that in mind as we go through this, all right? Now, you should choose the right business structure that gives you the right balance of legal protection and benefits. Now, let's talk about the most common types of business structures. 1, sole proprietorship. Number 2, partnerships. 3, the most common one everybody knows about, limited liability company, LLCs. Then you got corporation, a C Corp and an S Corp. So what I'm gonna do on this segment, I'm gonna go into each one of these. I'm gonna hit wave tops on them. I'm not gonna go deep in detail, but the point of all this is for you to take what I'm gonna tell you today and then do your own research and figure out whether or not which one you need. All right, let's talk about sole proprietorship first. So the sole proprietorship gives you, the owner, the complete control of the business, which means that if it's just you, you have complete control of the business, only you, all right? As a sole proprietorship, your business and personal assets and liabilities are not separate. I say again, as a sole proprietorship, your assets and liabilities are not separate from your business. All right, so your personal assets are at risk if you're just doing a sole proprietorship. All right, so, and you will be held accountable for the debts and obligations of the business. Keep in mind that as as a sole proprietorship, you will not be able to drop a IPO, which is your initial public offering, which means that your company cannot be traded on the stock market as a sole proprietorship. And then on top of that, banks tend to not lend to sole proprietorship companies.
Is it because of your personal, because your personal debt and all that stuff is included?
Exactly. It was a multitude of things. If this is just you, Latrice, doing it by herself, they only see you. You have no stock, no investors, nothing. All right. So to a bank, you're high risk.
Gotcha.
So that's why they tend not to lend to sole proprietors. So my recommendation, when it comes to being looking at sole proprietorship, if you're looking to scale your company or you have a lot of assets, don't use sole proprietorship. Don't do it. Now, only time sole proprietorship is even worth doing if you have a low risk business and you just want to test the business idea. That's the only time you would want to do that. If you just want to test an idea on the market, okay, cool, got it. And if it's low risk, right? That's the only time I would recommend using it. But other than that, if you're looking to scale your company, you're looking to continue to grow further outside of your community or wherever you're at, sole proprietorship is not the way to go. Don't do that. All right.
So what I do instead of a sole proprietorship?
I'm about to tell you.
Okay.
I'm about to tell you. I'm gonna get to you.
Learn something.
I'm coming. I'm coming. All right. So the next one we're gonna talk about are partnerships. All right. So like a sole proprietor, right? You have, as a sole proprietor, you're one. Now it's partnership is more than one, right? And there's two types of partnerships. You have a limited partnership and limited liability partnership. So limited partnerships have only one general partner with unlimited liability, and all other partners have limited liability. The partners with limited liability also tend to have limited control over the company, which means like if you're limited partner, you can't do everything. Like, so if I'm the, say BSG, right? Say I have the control. You guys are partners, but you don't have as much control as I do. All right. Now I'm gonna break that down how you guys are safe from all the taxes and all that good stuff here shortly.
Good, man. I was about to say, I just gave you all control, so you got to
Ain't
do
it
something good.
Ain't it man?
All right.
So
You got the taxes. Cool.
all right. The partners with limited liability also tend to have limited control over the company, which is documented in the partnership agreement. So it has to be documented. Profits are passed through the personal tax returns and the general partner. So that's me, right?
Okay.
The partner without limited liability, you also must pay self-employment taxes. So you have to pay self-employment taxes. Limited liability partnerships are similar to limited partnerships, but give limited liability to every owner. All right, it's called an LLP. Limited liability partners protects each partner from debts against the partnership. They will not be responsible for the actions of each partner. So meaning, if Latrice decides she want to go out here and do something crazy to BSG,
Probably.
yeah, she would be the one.
We had to vote, I'd say.
Yeah,
I'll be the one that wouldn't do that.
Yeah, right. But she wouldn't. You and I wouldn't be held liable for it. All right, that's all that means.
Sign me up.
Yep.
I knew it was a way around it. I ain't want to say that.
So, but the partnerships can be a good choice for businesses with multiple owners. Professional groups like attorneys. Like, you got a bunch of lawyers. They started a little firm or something.
Yep.
That could be a partnership. And then groups who want to test their business idea before forming a formal business. Same thing is like sole proprietorship. Like, if you're doing this and your thing is like, I don't want to be a formal company.
Yeah.
This is the way to go. All right. If you don't want to be extremely formal. All right.
So when you do that, are you able to upgrade? Is that
Oh,
what
yeah.
you're supposed to
You
do
can
after
upgrade.
that? So
You can upgrade.
Okay.
So when you're doing that, so once you get to the point and you like, hey, I want to go to the next level. All right. We're going to talk about those here. Either you go to corporation or LLC. All right. So now let's talk about LLC, the one everybody loves to talk about.
Yeah.
The LLC, which is actually pretty good. An LLC lets you take advantage of the benefits of both corporation and partnership business structures. LLCs protect you from personal liability in most instances of your personal assets. Meaning, remember I talked about earlier, if I'm sued or anything like that, or go bankrupt, my personal assets are at risk if I have a sole proprietorship. Okay? Well, LLC, you're not. You're not at risk. All right? Like your vehicle, house, savings accounts, they won't be at risk in a case if you have an LLC. and against bankruptcy and lawsuits. You know, a lot of people always say, you know, well, I don't think I ever get sued, but I'm gonna tell y'all a quick story. I almost got sued.
Here we go.
Yeah, y'all ready for this? Let me tell you how bogus this was. It was crazy. So a few years ago, I was with Last Strike Fitness. I had a segment on Famous Radio by Tyrone Callahan, Mr. Prince Hakeem out of Hampton, Virginia. He has a web-based radio show, and we would do a segment with those guys for the fitness world, right? So, you know, we wanted to jump in and do all kind of different avenues of fitness. So somebody recommended pole dancing. I don't know anything about pole dancing as far in the fitness world. However, somebody reached out to me and was like, yo, that is a real thing. Like, yo,
it really is.
You know how to do it?
I went to a class.
Oh no. We don't want to lose.
Can you drop them papers?
We don't want to lose no listeners, so we don't want to hear about your experience. So
I need the papers.
So anyway, a young lady, she's like, hey, I'm a pole dance instructor, blah blah blah, and so she sent me pictures of her, just her, inside of a studio to use for the advertisement for the show. Mm-hmm. Well, I get a call like the next day after the advertisement goes live on social media, and some lady was like, hey, you used my studio in a picture for an advertisement. I think I'm going to take legal action. Wait, what? Like, what do you mean you're going to take legal action against me for what? I said, I asked the person who sent me the picture, was it okay to use it? And the person who sent me the picture, which is one of your instructors, said yes. All right? And I was like, so you trying to sue me for what? She's like, well, my studio, you're not supposed to take pictures in there and post them on social media. Oh, no, lady, that's a lie. Because that same instructor had all those same pictures on social media. And so some of her other clients as well. So don't tell me that. But that's what I'm saying. Like, you can get hit with any type of bogus lawsuit. So always protect yourself. So, and an LLC will do that. All right? Profits and losses can be passed through your personal income without facing corporate taxes. However, members of an LLC are considered self-employed and must pay self-employment tax contributions towards Medicare and Social Security. I'm going to say that again. Members of an LLC are considered self-employed and must pay self-employment tax contributions towards Medicare and Social Security. Guys, do not get caught up not paying those taxes. Please don't do that. All right? LLCs can have a limited life in many states. Remember, so you got to look at your state. Whatever state you're in, look at it and see what the life expectancy is of your LLC or how long that lasts. When a member joins or leaves an LLC, some states may require the LLC to dissolve and reform with new membership, so you got to reapply. So we did an LLC with us, and Latrice decides, you know what? I'm done. I'm good. I don't want to do this no more. We got to redo it all over again.
Why am I your example?
Because you're the worst one of the group.
Negative example.
You're the outcast. You're the outlaw of the group. You know what I'm saying? Will comes in every day with a positive attitude, and you're the one that always comes in here giving us grief. So that's why.
I didn't say it.
Wow.
You're the one that always gives us grief. So yeah.
That's alternative fact. Just
whatever, girl.
That being said, so how much is it gonna cost me to stand up this LLC? Because Latrice, not to put any names out there, but somebody in this group may cause some problems. So I just want to know about how much it's gonna run me.
I know
to set this up.
Well, it depends on the state and it depends on who you get to do it.
All right, what if I know a small state in the Northeast that a lot of other people use for tax evasion?
About $300.
That sounds about right. 300 to make sure Latrice pole dancing.
Yeah.
Separate.
Man,
from
don't ever use that in a sentence again, because we need listeners.
What's your single bills that you bring in the stacks?
Don't use pole dancing and Latrice in the same sentence.
Ones.
All right. Hey, so LLC could be a good choice for medium to high risk businesses. Like for me, when I first started, I had an LLC because I was doing personal training, and for me, like people can get hurt, and you try to sue me. I got insurance for that though, but you can try to sue me and try to take all my stuff. Cool. So LLC was good for me starting out.
Like that one time I couldn't go to work because I was hurt so bad.
You was just sore. Chill. You was just sore. Like, look, this joker would be like, we did these weights and now I'm sore and I can't move. I can't get in the bed, out of the bed. I'm like, that ain't my problem, lady.
Was this at the last strike pole dancing class?
No, I ain't got none of them. Go ahead, man.
I think I'll make sure. I'm finding out a lot of things about this group that I didn't know in the beginning.
Hey, but also, if you're an owner with significant personal assets and you want them protected, an LLC is the way to go. All right, and owners who want to pay lower tax than they would with a corporation. Now let's talk about the corporations. We're going to talk about C corps first. A C corp is a legal entity that's separate from its owners. Corporation can make a profit, be taxed, and can be held legally liable. All right. Corporations offer the strongest protection to its owners from personal liability, but the cost to form a corporation is much higher than other structures. Corporations also require more extensive record keeping, operational processing, and reporting. Unlike sole proprietors, partnerships, and LLCs, corporations pay income taxes on their profits. In some cases, a corporation is taxed twice. All right. So when they're taxed on the income, and then if in a corporation you're allowed to have shareholders, like we're talking about buying stocks and stuff like that. That's a corporation. You're able to buy the stock, and then when they issue out dividends, they got to pay taxes on that as well. That's crazy. All right. So corporations also have a completely different life separate from its shareholders. If a shareholder leaves the company or sells his or her shares, the corporation can continue to do a business undisturbed. So I think that's what we need to do, Will. We need to do a corporation.
Okay.
So when Latrice decides she wants to leave,
boom,
we're undisturbed.
That's fair. Because she tried to leave, y'all. I want y'all to know every meeting that we go to about growing the group, it's us talking about BSG. And she be like, so tell me about this Forex Queen and how can I get my own page and how many followers?
That's what I'm saying. Like, you trying to do something different? All right. So anyway, so corporations have an advantage over all the other ones I've talked about thus far when it comes to raising capital, because they can raise funds through the sale of their stock price, right? And which is also attracting employers, employees. So when people, they look at big corporations for employment because they look at stability. And it's like, hey, they're being traded on the stock market. They got to be a good corporation. I'm going to go work for them, like Apple. But
or Hertz. Good luck with that.
So
my bad, Hertz. I'm sorry. It just happened today. I would rent cars from you. I might actually buy one because the prices look pretty good.
That is correct. And corporations can also be a good choice for medium to high risk businesses that need to raise money, and businesses that have a plan to go public or eventually be sold. So if you are growing a company and you need to raise money, you want to go public, which means drop your IPO, get traded on the stock market, or eventually sell your company, C Corp is the way to go. All right, the last one we're going to talk about is the S Corporation. All right, and I'm just going to hit this real quick. The S Corporation has all the benefits of a C Corp, except on the S Corp, you don't have to double dip in taxes. You won't be double dipping taxes. All right, and then you're taxed differently in different states. Everything is essentially the same, except now, when you start talking about dropping your IPO, it's very limited. You can only have 100 shareholders in an S Corp, and they have to be American citizens. That's the biggest difference between the S Corp and the C Corp. So you can have the 100 shareholders as citizens, and you have to have strict filing operation processes other than the C Corp. All right, and then also S Corp has also independent life, just like the C Corp.
You sure they got to be American citizens? Because I know there was a Nigerian prince that called my phone and said that he had a corporation and I can go in with him. All I had to do was send $5,000 and I can be in a corporation. That's not.
Did you send it?
I didn't, but you know, should've. He sounded convincing.
He did sound convincing, didn't he?
How did he say it?
Would you like to be a member of my? No, I'm joking.
Oh God. Hey, so anyway, those are the business structure types, man, and I gave a brief description on each. So what I want you guys to do, man, and I'm gonna talk about as a call to action as well, is take that little bit of information. I hit Wave Top to go back and research it on your own and figure out what your company needs. All right, if you're just getting started, you just want to test the waters, maybe sole proprietorship is for you. If you want to go big and eventually sell, at some point, do a corporation. If you want to be, you don't plan on selling or anything like that, or want to drop an IPO anytime, LLC may be the way to go for you. Just figure out what you need and go ahead and make it happen, all right? So for my advanced people, let's talk to the advanced listeners today, all right? So today, for our advanced, we're going to talk top-down analysis Troublemaker Latrice. Not Forex Queen, the Troublemaker. Solo rider. Let's go. What we got?
I feel some type of way, but we're going to go ahead and move forward.
Don't feel no type of way. We still love you, though.
So last week, we talked about Fibonacci. We talked about the retracements and how we use them in the Forex market. So when it comes to top-down analysis, you can start at your highest time frame. Like for us, it's the monthly time frame. So we start at the monthly time frame, and you can draw your fibs like we talked about in the last episode, from your top, the highest point in the market, down to the low. Draw your lines. These Fibonacci retracement numbers become your support and your resistance. So when you're looking at that, each time frame has its own support and resistance. Yeah. So you want to make sure that you're looking at different things. And like I told you before, I don't use indicators. I just use patterns, price, and when I'm trading and structure. And so now from the monthly time frame, I'm going to take it down to the weekly. And then I may, from that point, establish my support resistance by maybe drawing my fibs in between those spaces. So you got fibs on fibs. So now this is my support, my weekly support. So I'm labeling my monthly support, my weekly support. Then I'm going to go down to my daily chart. This is my daily support. And all these are ways to get in the market. 4 hour. So this is my 4 hour support. And you can go all the way down to 1 hour, 15 minutes. So what that establishes is, even though I may be waiting on a big move on my monthly or my weekly or my daily, I'm going to catch these smaller moves in between on the hour and the 4 hour, catching the market up and down until my setup is ready on the higher time frame.
Yeah.
Because once I get to the higher time frame, that's my big move. So that's why I'm going to make the bulk of my money is on those higher time frames, what we call swing trade. So on the daily time frame, I'm going to do more day trading. But on the higher time frame, I'm going to swing those positions. Nice. And swings just mean I'm holding those positions.
Yeah, same thing in the equities market.
Yeah. Somebody might be like, "Was she a swinger?" No.
What?
It's swing trading.
You own one today.
See?
We about to lose a whole lot of freaking listeners because you talking about pole dancing, swinging.
You brought up pole dancing, sir.
I gotta disagree. We might actually get a lot of freaking listeners, but conservative listeners, they might be like, "Oh, wait.
Oh, wait a minute. What is this?"
I don't like them.
I like
As
this
a
one.
matter of finance.
They talking about pole dancing. They ain't talking about no money. They talking about making money on the pole.
What you say again? What you say?
As a matter of finance, let me find out.
Oh my God! Hey, Will, hit us with the macro versus micro indicators, man.
So we're gonna use the terminology, and I like to break it down the easy way. We'll talk about macroeconomics versus microeconomics. I'm not gonna give you a whole college course, guys. I'm just gonna define it. Microeconomics is the study of individuals and business decisions, while macroeconomics analyzes decisions made by countries and governments. So if you look at micro and macro that way, you can also look at a company and its price moves that way. If you all don't know, I'm a chart guy, and these charts, I like to use indicators. Where Latrice uses patterns and market formation, I like to use the indicators. That includes the MACD, the stochastics, the volume, and any other indicator. But the large indicators, i.e., if I use a 200-day moving average, a moving average of what the stock price is, I can use that as a support line macro to say if it drops down to the 200-day moving average, a lot of times a company is probably trading a little bit worse. So I don't want to go long on that company. I may be shorting it as it approaches that 200-day moving average, or it may bounce off. The micro indicators are things like the TTM squeeze or the TTM scalper. We'll talk about that one more in a video in the group, but just know that those are some of the micro indicators that let you know at what time you may want to enter the market, because it matters. The macro tells you what the overall trend is. So if you have a trend that's going up, you want to be on that trend, but you also want to use the micro indicators to say, hey, I want to buy in, but I don't want to buy Apple on the day when it's going to drop $12. I want to get on the day that it looks like it's going to rise $12. So that's how we use the micro and the macro indicators to decide when to get in and out of trades. Some of the same thing that Latrice is talking about, she used the Fibonacci's, and when you combine all of those things, that's what gets you the assurance that you want to buy a company, because you may see it go down. If you don't have that support line, as soon as you see it go down $2, you may say, oh no, I got to get out of this company. You may know that the trading range is a $12 trading range. Yeah. So $6 down just means that there's another $18 that it can go up and it's still acting normal. So we want to be able to identify those patterns in the charts when we're trading.
So how do you in the stocks equities determine? For us, it's all about the trend. So your higher time frames are going to confirm that trend because you don't want to trade against the trend.
Yep.
So is that something that you all look at? So even though we use fibs, I may put trend lines and other things that, because trend line is going to give you that support and resistance as well. We talked about the touch rule in episode 1, 2, 3, 4, 5, 6, 7, and 8. So you can go back and look at that touch rule on those trend lines. So is that something that you all look at as well on your time frame? I don't know. Do you all use your time frames to determine that trend?
So I'll answer that question, but first I want to say, in an episode where we've talked so much about pole dancing and ones, I don't like the touch rule. I don't think that's a great analogy. I think we should change that up. It felt serious, right? I'm joking. Okay. We use those lines. I'm sorry. But yes, we use those.
Threw
those
itself off.
Yeah, I did. Everybody looks so serious. It threw me off. Those micro and macro indicators. Man, I'm stumped right now.
But you threw yourself off.
I did so well. All right, reaction, Latrice. Summarize the question. I'm gonna get it right this time.
How do you all establish your trend? Do you use your higher time frame?
There we go. So for me, I say moving averages first, and I use the 200-day moving average because it's one of them that everybody kind of sees. But we also have things like the golden cross, where you have the 9 and the 50-day moving average, or sometimes people use the 9 and the 21-day moving averages. But what you'll see is, as the stock has went down, especially when you see significant down movement, that crossover will happen, and you'll see, hey, if my 9-day moving average is below my 21-day, that means that we have a larger trend down. Gotcha. So what we're looking at is we want to be able to say, hey, it's starting to turn up, so that's when we want to get in when we see a turn. And then we look for those big pop days when something like a 9 and 21 day actually cross each other on the way up. You want to be on the buy side to say, yep, I want to catch this trend on the way up, and then trade it even as it starts to consolidate.
Nice. Gotcha. I like it. You got anything else on that, Will?
No, I micro and macro, I'm pretty much done. I hate that I threw myself off, but the bigger thing to think about is all the things that we're talking about, they work a lot better in a normal market. So this is the time to learn these things, even if you're not using them, because eventually the speculation is going to go away. Absolutely. And you want to be able to trade in a more normal manner. Right now, just my last nugget for the day is everybody's at home, everybody's trading, everybody's in the market. When everybody leaves the market, guess who's still going to be there? Those hedge fund managers and those people who know what they're doing and do it for a profession. Right. So once that starts to happen again, we're going to see a market changeover. We want to know how they think so we can emulate their moves, and we can move away from speculation back toward that dollar cost averaging thoughts process.
Right. Latrice, you got anything else before we close out?
Not to mention, you also want to look at your quarters that you're in, because that also affects the market as well. So depending on your quarter, the summertime is coming up. The market may not be as volatile. It just depends on if people are able to vacation and those kinds, because a lot of the hedge funds, the big money people, they're on vacation.
True.
So that affects the market as well. So a lot of things are going in place. So definitely I see more need to go to those high time frames, because that's where the setups are, not on those little small time frames.
Nice. Hey, man, so before we close, all right, if you want to be a guest on the Money Talks podcast by the Black Sky Group, email us at blackskygroup1@gmail.com. That's Black Sky Group, the number 1 at gmail.com. Here's some calls to action. All right, if you're thinking about it, do it. Do it now. Like, tomorrow may be worse than today. And I'm going to give a special message today to you guys. Everybody, with my camera, this camera, that camera, no, I'm going to go straight ahead. So check it out. Listen, there's nothing wrong with waking up in a bad situation, i.e. being broke or anything like that. There's nothing wrong with that. Trust me, when I talked about my why in episode 1, 2, 3, 4, 5, 6, 7, 8, all right? When I talked about my why, I told you I was broke at one point. But here's my thing to you guys. If you wake up broke, you got to be a bold person to continue to lay in that bed. Get your behind up and go make something happen, all right? Get up and let's go, all right? So, choose the right business structure for you, all right? We talked about it already. Choose the right business structure. and continue to understand your why and become obsessed with it. For my traders out there, take all the information discussed on this show today and use it part of your trading strategy. They dropped some nuggets today about top-down trading and indicators and all that good stuff. Use all that and perfect your trading strategies, all right? So today's show was sponsored by Proprietorship Solutions. Services include credit counseling and debt settlement. For more information, go to their website, www.proprietorshipsolutions.com. That's www.proprietorshipsolutions.com. Spell it, B-Champ. One more time, spell it for the people.
You spell it.
Yeah, you spell it. I don't know how to spell
That's
it.
so childish.
I don't know how to spell it.
PERSONAMEANT Solutions.
Spell it one more time without laughing.
PERSONAMEANT Solutions.
Yes. And on that note, that's all the time we have for today, man. Tune in next week where we're going to continue to break things down for the entrepreneurs, and for our traders, we're going to continue to get you guys started and going in your portfolios. With that being said, Godfather signing out.